for over 180 years. As part of our service, we continue to keep our members up to date, and thus we have this Crow Expert Hour that is going to be done periodically, maybe once every 2 months. So keep track if you want to know more. Before we start, some housekeeping rules. Those that has logged in via Facebook, if you have your questions, please do put it into the comment section, and we will try to answer them as much as we can. Those that are on Zoom, you can key in your questions on the chat box, right? Without further ado, today's topic is the Madani Budget 2023 and how it affects employers and employees in Malaysia. It has been start-stop, but finally we have something which addresses across the rakyat, and this is something that Crow will probably allude you to some of the things that you need to look out for. Okay, and in this session, we will discuss some key highlights of the 2023 budget, how they impact your business and your workforce. There are some subtle changes to the employee tax. There are also some initiatives that is provided by EPF and SOCSO that you may want to look out for. There will be a sharing of some practical tips on how to prepare for these changes. And of course, the gem of the whole series here now is to take advantage. How do you take advantage of some of these opportunities as presented by the budget? Today, in this live Zoom webinar, as usual, we have our Crow Global Mobility Executive Director, Sharlina Jaafar. Without saying, many 19 years of experience specializing in tax filing, compliance, work permits, payroll services for both local and expatriates, advisory, mainly a lot of employment issues and tax planning. So, are you all ready? I want to hand over to Sharlina. Sharlina, are you ready?
Yes, I am, Sean.
Okay,
Thank you.
over to you, and let's have a riveting time.
Okay, thank you very much. Let me share my screen first. Okay. All right, can you see the full screen?
Yes.
All right, thank you, Sean. Okay, thank you for the quick introduction, Sean. And I would like also to express my gratitude to MICCI for giving me the opportunity today to share some insights, on the recent updates related to the budget 2023. Okay, good afternoon also to everyone today, and I appreciate your time, all right, and attention for the next 45 minutes as we discuss the topic of this 2023 budget announcement affecting employers and employees. For some of you, okay, it may be your lunchtime, and I promise this is for the non-Muslim, and I promise to keep these sessions brief. All right, okay. All right, this is our collaboration session for the first, like Sean say, in the 2023 with MICCI, and I am the speaker. Okay, let us go very quick on the contents, Firstly, I will go on the very brief on the 2023 budget highlights for the employer and employees, followed by the overall implications of budget 2023, and also if you do have questions, please do not hesitate, to post your questions or to answer live during the half an hour session from 1:30 until 2. Okay, my session will start on until 1:30. Okay, without further ado, let us go quickly on the 2023 budget highlights for the employer and employee. All right, okay. The revised national budget 2023, it was retabled on 24th February 2023 by our Finance Minister our Prime Minister Yang Amat Berbahagia, Datuk Seri Anwar bin Ibrahim. The 2023 budget will be the first step, in laying the Malaysia Madani Development Framework. And in his presentations, Datuk Seri Anwar Ibrahim has focused on 12 main measures based on 3 pillars. First, named as a comprehensive and sustainable economic drive. Secondly, on reformation of institutions and good governance. And the last one, addressing on the inequality through social justice. Okay, if you look at your right-hand side, we also has a summary. What was the original table in terms of government revenue, government expenditure and deficit, and also deficit GDP in original 2023 and also in the revised 2023. So if you look at this on the government revenue, the government expects our revenue collection for year 2023 to total 291.5 billion compared to the 272.6 billion original presented in October 2022 budget. In terms of the government expenditure, in the original 2023 budget, it was announced as 371.7 billion as opposed to the revised budget 2023, which is 388.1 billion. All right. If the government takes this 291.5 billion in revenue in a particular year, 2023, and its expenditure for the same year are 388.1 billion. So it will run a deficit of 96.6 billion for 2023. Right? Okay. And we go further in terms of the managing debt levels. You can see that the central government, our Malaysian government deficit is seen as at 5% of GDP in 2023 compared with 5.5 in the October budget and the 5.6 obtained in 2022. All right. Okay. So this is one of the comparison that we made between original 2023 budget and the revised. Now we move on to the what are those budget revised affecting the individual tax very quickly. On the first one, review of the resident individuals' income tax rates, right? So the income tax rate of resident individuals in each chargeable income. When I say chargeable income, meaning that your total income minus your personal relief, then that is how you can get your chargeable income. So the tax rate of resident individuals in each chargeable income band between 35,001 to 100,000 will be reduced by 2%, and the income tax rate of resident individuals in the chargeable income band over 100,000 to 1 million will be increased by between 0.5% to 2%. So the tax implication on this that a reduction in the individual income tax rate by 2% for each chargeable income ranging between 35,001 to 100,000 would provide tax savings of up to 1,300 per year. All right. So for those, the income tax rate for the top income bracket that will increase to 0.5% to 2% of chargeable income bands between 101 to 1 million or up to 400,000 for individual taxpayer actually were affected that most those that have higher income earning during the year. All right, let's move on to the expansion of tax relief on medical treatment expenses. The tax relief for medical treatment expenses, as you are aware of, for self, spouse, and child will be increased from 8,000 up to 10,000. Okay, in 2022, for the purpose of submission of your income tax return for this year, it is still remain at 8,000 if you claim medical treatment expenses for yourself, child, and and also for your spouse. Yeah, when we're talking about medical treatment expenses here, actually it refers to the medical expenses related to a serious disease. All right, not that the normal medical expenses that you go to the hospital because that you have that kind of uh, blood pressure or diabetic that is still controllable or manageable, but this is really chronic disease. Yeah, so currently for the YA 2022 it's 8,000, but now effective from this year YA 2023, the medical treatment expenses is proposed to be increased up to 10,000. In addition to this one, the scope of income tax relief for this medical treatment also has been expanded, and it includes the intervention expenditure for autism, for attention deficit hyperactivity disorder, global development delay, intellectual disability Down syndrome, and a specific learning disability, which is limited to 4,000. And when we're talking about this medical treatment, yeah, actually it refers to your children, yeah, Down syndrome affected with the autism and Down syndrome and autistic, and these changes will be effective from YA 2023. We move on to the expansions of tax relief on life insurance or takaful contributions. Okay. Of the mandatory contributions to approved schemes or voluntary contributions to the EPF, not including private retirement scheme, yeah, or contribution under any written law is up to 4,000, right? In addition to that, if you have a life insurance, yeah, so you actually order takaful contributions, you can claim in addition to the 4,000, 3,000 for this premium insurance that you paid on the life insurance or takaful contributions. Okay, but now they expanded to include voluntary contributions to the EPF. Okay. And these new measures will be applicable also to civil servants under the pension scheme from YA 2023. Previously, for those who are the civil servants, they are not allowed, yeah, to contribute. They are not allowed to contribute to the. They are not given any EPF. Any tax relief on the EPF contributions, but now they're including civil servants who wish to contribute to the EPF, yeah, because usually civil servant, they may have a pension scheme, yeah. So if let's say they wish to contribute to the EPF as a voluntary contribution, so they will be eligible to claim the income tax relief, right, up to 4,000 on the voluntary contribution of EPF. And if let's say they have this tax relief and life insurance takaful contributions, they can also claim up to 3,000. All right. So the next one is on the extension of tax relief for childcare centers and kindergarten fees. This is straightforward, yeah. Currently we can claim up to 3,000 if we spend or if we incurred fees on the childcare centers, yeah, and also on the kindergarten, and we can claim the fees up to 3,000. But this one, under this revised budget 2023, this income tax relief will be extended for another year until next year, YA 2024. And this proposal was tabled previously and is now being retabled, so without any changes. So when we are talking about the eligible childcare centers, if you incurred the fees, yeah, the tuition, the childcare centers fees or the kindergarten fees, the childcare center fee, the childcare center, it must be registered with the Social Welfare Department, yeah, and for the kindergarten, it must be registered under the Ministry of Education, yeah, for you to eligible to claim those fees incurred in the calendar year. All right, now we move on in detail, the review of income tax rate for resident individuals. If you look at the proposed as per 7 October 2022 announcement, and also the proposed updated on the budget 2023, we can see that when we are talking about the reduction of 2% for the chargeable income ranging from 50,000 up to the 100,000, all right? And you can see that how much would be the tax savings. Look at the under proposed tax rate on the tax saving. So if let's say that your chargeable income is in that ranging, so you can gain a tax saving up to the 300 ringgit until to 1,300, depending on how much chargeable income that you are in, right? Okay, but if you're talking about on the increase of the income tax rate on the 0.5% from 24.5% to 25% for those individual or taxpayer having a chargeable income from 250 and 1 to 400,000. So you can see the increase, in the additional tax, of the in the ranging of 200 ringgit up to 10,950. Yeah, so this is where that you can see for those affected, for those taxpayer affected by this revision of the income tax rates. All right. Okay. Now we look at the next one on the review of the income tax rate. Okay. For the contribution for these EPF contributions and also life insurance premium and takaful contributions. Okay. Currently, from the 1A 2022, the scope of individual income tax relief for EPF contributors is expanded to include self-employed, voluntary contributions, including civil servants under the pension scheme. So if you look at the type of payment contribution, for those who contribute to the EPF, or under or voluntary contribution, they are allowed to claim the income tax relief up to 4,000 per year. And if they pay premium to the life insurance or takaful contributions or voluntary contributions to the EPF, they can claim up to 3,000 per year. So the total allowed for the purpose of D2 category is 7,000. So for the civil servants, under the pension scheme, not voluntarily contributing to the EPF, they are only entitled to claim as follows. So for type of payment, if you look at under the contribution to approved schemes or voluntary contribution to EPF, not including PRS or contribution under any written law, there is no any relief applicable per year, but they are allowed to claim if let's say they pay insurance to the insurance premium or takaful contribution, which is up to 7,000. So you can see for those civil servants, if they made contribution to the EPF as a voluntary contribution, there is no relief. There's no relief applicable to this what we call this civil servants. But with the revisions of this proposed in the budget 2023, the tax relief for the life insurance premium or takaful contribution to be restructured as follows. If you can see, for those who are mandatory contribution to the EPF and voluntary contribution to the EPF, same as before, they can claim the income tax relief up to 4,000. And for those who also pays in premium to the life insurance or takaful contribution, including additional voluntary contribution to the EPF or both, so they can claim up to 3,000. So the total is 7,000. So this new tax treatment actually is applicable to all contributors, including self-employed, employees, and also civil servants under the pension scheme. Okay, if you want to know more about or clarify all these contribution, actually you can seek consultations from the EPF board and also from the LHDN. Right? Okay, now we move on to the next slides. Expansion of income tax relief on medical treatment expenses. this is the one that I mentioned just now. Currently, we can claim up to 8,000, yeah. And also this 8,000 is related to the medical expenses incurred for a serious disease, which is the serious illness for taxpayer, spouse or child, or if let's say for a married couple, they have go for the fertility treatment, right? And let's say for you or yourself and your spouse, you take a vaccinations, and let assuming that for you, yourself, your spouse, you take a full medical checkup, or if you have a mental health checkup or consultation, including COVID-19 detection test, or you purchase the self-test kit for taxpayer, which you can claim up to 1,000. For the vaccination, you can claim up to 1,000, which is it is incurred for yourself, spouse, or children. But this is in the total form part of the 8,000. Yeah. For example, that if let's say that you incurred tax treatment, medical tax treatment for let's say for 7,000. Yeah. And then you also incurred for the full medical checkup and mental health for 2,000. You are only allowed to claim 8,000, not 9,000. So the 1,000 here belongs to the full medical checkup or vaccinations or mental health checkup. So this 1,000 vaccine and full medical checkup is form part of the 8,000 allowed for under medical expenses. What are the proposed in the revised budget 2023? So this is one of the measures to ease the financial commitment, yeah, on the early intervention for children with learning disabilities. So the scope of tax relief, as I mentioned earlier, is to be expanded to include intervention expenditure for autism, for attention deficit hyperactivity disorder, for the global development delay, Down syndrome, which the IRBM said that you can claim limited to 4,000. But there is also the IRBM has also made a clarification, said that the diagnostic assessment must be certified by the medical practitioner registered with the MMC, and also the early intervention and rehabilitation program must be conducted by recognized health profession practitioners, which is registered under the Allied Health Profession Act 2016. So these medical treatment expenses, if you combine, you can claim up to 10,000, right? Okay, instead of 8,000. Okay, all right. So now we move on to the next slides. Okay, this is not a new. This one we are talking about the extension of income tax relief for children's early education. All right. Okay. Prior to the YA 2020, you can claim the tax relief up to 1,000. And in the current year, YA 2020 to YA 2023, you can claim the tax relief up to 3,000. But it is not new. You still can claim the 3,000, but the only changes is that now the government has extended the relief for another 1 year until 2024. There are conditions if you're talking about what are the conditions related to the children allowed for the purpose of this claim of this child early education. Yeah, the children must be up to 6 years old. Yeah, and if let's say you send your child to the childcare center must be registered under the social welfare department. All right, and if you send your child to the kindergarten, so the kindergarten must be registered under the Ministry of Education. So if let's say that you send your children to the babysitter, for example, which that the babysitter is not recognized or registered under the social welfare or the kindergarten, you are not allowed to claim this income tax relief. Okay. All right. Now we move on to the next slides. On the extension of income tax relief for net annual savings. Okay. All right. If you can remember when our Prime Minister announced on the revised budget 2023 on the 24th February 2023, this SSPM was not gazetted or was not informed whether this SSPN still continue for the year of assessment 2023 onwards. So if you see current, this SSPN is only allowed to be claimed by the depositor from 1A 2021 up to 1A 2022 only. But it has been proposed recently that the government consider that this extension of income tax relief for the net annual saving in SSPM to be extended for another 2 years, which is effective date is until YA 2024. So if you actually one of the depositors for the SSPN, so you can take into account your income tax relief under at the SSPN up to 8,000 when you file your income tax return for this year. All right. So now we move on to the special voluntary disclosure program under the direct tax. And it also has been announced in the revised budget about this approach of the LHDN program under the SVDP. Right? Okay. So if you remember, there is a way back in the 2018, the LHDN has announced on the SVDP program for the first SVDP program they call as a 1.0, to the public to say that if you that you can actually make a voluntary disclosure, and the disclosure period is from 3rd November 2018 until 30th June 2019, and also for the 2019, the disclosure period is from 1st July 2019 up to 30th September 2019. And the penalty rate at that time when you volunteer disclosure of your unreported income will be imposed at 10% in 2018 up to 30th June 2019, but 15% from 1st July 2019 up to 30th September 2019. All right. Okay. So this is actually governed under the Income Tax Act, Petroleum, and also RPGT Act, and also Stamp Act. Yeah. And the objective is to encourage taxpayers to voluntarily declare actual taxable income. All right. Now, subsequent from this program, so the LHDN managed to collect 7.88 billion from the 286,428 contributors, including 11,176 new taxpayer. So what has been announced in the revised budget 2023. So the SVDP program has been introduced under 2.0. It has been proposed that the voluntary disclosure will cover for all corporate and individual taxpayer, except for taxpayer who are currently undergoing tax audit or tax investigation. And they also mentioned under this SVDP program that there will be a remission of penalty 100%. They will waive the penalty 100%, and the effective date is from 1st June 2023 to 31st May 2024. Right? So, however, we have there is no as to date, the IRBM hasn't come back with the procedures how we should go about this SVDP. So therefore, more and more details required. Yeah, for example, what are the key differences between the SVDP under 2.0 as compared to the previous SVDP 1.0. What are those differences? What are the key differences? All right. The next question, that what types of taxes and years of assessment will be covered under the SVDP 2.0? and what are the underlying conditions, for participating in SBDP, because we also wanted to know if let's say they are referring to those that never report any income or underreport the income, or is it also covered employers, or is it only cover individuals, or is it only cover companies? There is also we don't know what are those uncertain conditions that they haven't clarified in this announcement. All right. The next one, what are the approaches by the RRB, in implementing SBDP 2.0? Are they going to accept in good faith without tax audit conducted? And lastly, will the IRBM issue a written document affirming that no future audit investigation is to be conducted on taxpayer who participated in SBDP 2.0? Right? So, so we hope that the IRBM can come back with more and more details about this SBDP program. So for those taxpayer wish to participate in SBDP program, so this is actually have give you the opportunity to clear all your outstanding taxes, unreported income, and this is the time that where the government encourage you to come forward and of course to report all your unreported income. All right. All right, what is the next one on the changes that has been made in the 2020 revised budget? Mandatory e-filing of income tax return, amended income tax return, and employer return. All right. So, IRBM has made as a compulsory for all the entities to file the income tax return online. Currently, the company LLP and also the company they some of them they are allowed still to submit their income tax return via manual, but effective from 1/8/2024, the company and also the LLP, including all individual, of course, for the individual, we have already submitted our income tax return online. But for this company and LLP, they are proposed that all categories of taxpayer, company, LLP, trust body, including cooperative society, they must file their income tax return via online effective YA 2024 onwards. Yeah, we are talking about all categories of taxpayer. We refer to the all taxpayer including individual, partnership, association, deceased person estate, and Hindu joint family. Right? Okay. So the next one, we move on to the revision of notice of installment payments CP 500. For those who are not aware of or doesn't know what is the CP 500, okay, for those who are earning business income or sole proprietor, instead of comply with the monthly tax deduction only applicable for those earning employment income, employee, but for those who run their own business, who are not employee, if let's say they earn business income, so they must pay a directive installment which is called as the CP 500. All right. And what is the mechanism under the CP 500? Usually, the CP 500 will be issued by the LHDN or IRBM to those taxpayer that is required to comply with this installment once a year, and they are allowed to revise if there is any revision to be made on or before 30th June. For example, if let's say that you have estimated your profit from your business for calendar year 2022, for example, for 10,000 profit, and you have decided to pay the installment payment via CP 500, maybe in 1,000 by installment. Yeah, but because CP 500 we are paying by installment, not per month, by installment, once in the 2 months. So Then it happens that you found out that before 30th June, you found out that, oh, okay, for this year profit, I may not achieve uh 20, I may not achieve 10,000. For example, I may want to reduce to 8,000. So you are allowed to revise your bi-monthly installments, yeah, to take into account the revision of your decrease in profit of the 10,000 just now on or before 30th June. But now it has been proposed that you are allowed to revise your estimate of the CP500 installment 2 times. First on or before 30th June, and the second is on or before 31st October. Alright, but if let's say that you are not doing on the 1st October on the revision, you are allowed to do both first and second on by 31st October also, which is when effective this year, yeah, effective from YA 2023. So further information, actually you can clarify with the allocation officer at the collection unit how actually you can do this 2 times revision for your CP 500 installment. Okay, all right, now we move on to the next one.
Hey, hi, Shalina.
Yeah, yes.
Seems your video has frozen.
Oh, is it?
We are hearing you okay, so it's all right. Don't worry.
How come? Okay, can you see the highlights of the revised budget now?
Yes, can. It's just your video of you.
Okay. I don't know what happened.
Maybe
But you
stop
can see
video
the.
and turn on again.
Oh, okay. Just hang on, yeah. Yeah, I don't know what happened to my video. It happens a few sessions
But
actually.
never mind, we can hear you
Maybe
clearly.
yeah, you can still hear me. Okay, maybe later I will do the this one, but maybe I can continue on the highlights on the revised budget for SOCSO. We have go through on these LHDN tax on the tax implications subsequent to the budget announcement. Now we want to know what are those incentive that the following from the budget 2023 from the perspective of other statutory bodies, for example, like SOCSO and EPF. Okay, so we look at the SOCSO first. Okay, under the budget 2023, SOCSO has been allocated more than 330 million to implement 5 national social protection initiatives and 5 active labor market program this year. Okay, so the SOCSO will amend its act to allow disbursement of grant to equivalent to 80% of the insured salary value of workers to encourage women to get back into the workforce after long maternity or parental leave. So this is what one of the SOCSO program, because in effort to encourage the re-entry of women into the workforce, so they will amend the Employee Social Security Act to provide that they will grant of up to 80% of the insured salary value of the employees, right? Okay, the next one, what other incentive? They call as the micro credential skill improvements program for gig workers. What is a micro credential skill improvement program? So a micro credential in the short is a personalized and often on demand learning experience which teaches students or a range of skill and competency. So this is something that are also focusing on the gig workers, where the government will support their training fees up to 4,000 for the program. And in addition to that, also SOCSO will provide an allowance of 300 ringgit for 3 months for gig workers who are active and undergoing a training program. Right? So this is one of the we do not have any details yet about this program, but I think soon or later SOCSO will come up with this announcement and how actually for the gig workers can participate under this micro credential skill improvement program. Okay, When we're talking about the social will provide an allowance of 300 for 3 months for the gig workers who are active and undergoing this training program. This is also including for those under the EPFI Saraan, yeah, because this is where the government also will increase the contribution from 250 to 300. Okay, so further information actually we can find out from the Perkeso or SOKSO website. The next one is under Skim Keselamatan Sosial Pekerjaan Sendiri, where we call as the SKSPS under SOKSO. So the government is determined to improve the social security system, yeah, by obliging all self-employed individuals to contribute under the SKS pre-S gradually. So this SKSPS, or they call as the self-employment social security scheme. Actually, it was created or established, yeah, since 2017, yeah, to provide protection to self-employed individual. So this scheme, SKSPS, actually is the scheme that provides protection, yeah, to self-employed insured person from occupational disaster, including occupational disease and also accident while they carry out of their work activities. So to protect them, actually 100 million will be allocated for the government to pay for at least 80% of the SOCSO contribution of these self-employed individuals. So in a way that they encourage for all these voluntary contributions to also contribute to the SOCSO. All right. Okay. This now we move on to the EPF. One of the what are the highlights of the revised budget under EPF? We call as the matching contribution to the EPF. Okay. Okay. Sorry about the ISARAN. ISARAN just now that I mentioned just now, the also actually is for the EPF. Yeah. Aside from this, the budget 2023 also offered some incentive, yeah, for the EPF ISARAN voluntary contribution scheme, where the government will increase, yeah, their contributions matching incentive from 250 to 300, and this is expected, yeah, to benefit over 100,000 members in the scheme. Okay, so actually this ISARAN, for those who are not sure what is the ISARAN actually is the one of the program that encourage the members who are those who are housewife, yeah, uh, who are outside the formal sector, to contribute to the EPF, and then to encourage them, okay, to contribute to the EPF. So that's why then the government will increase the value of the matching contributions from 250 to 300 per year. Okay, the next one is the contribution to EPF by 500 ringgit. So the government also has agreed, yeah, to contribute 500 ringgit to EPF members, but the age is only between 40 and 54 with the EPF saving of less than 10,000 in their account one. Okay, all right. So the next one, we're talking about the increased voluntary contribution for the EPF voluntary contributions, which the government has proposed. Instead of the EPF voluntary contribution limit is only 60,000 currently, but they are proposed to increase up to 100,000 per year for the voluntary contribution who wish to contribute to the EPF. Right, so this is something that a good also opportunity, yeah, for the voluntary contributions to make more and more savings in the EPF. If last time the limit is only 60,000, but now they have increased up to 100,000 per year. All right, okay, that is very brief on this initiative from the tax, EPF, and SOCSO perspective following from the revised budget 2023. Okay, now we look at in details on the overall implications of the budget 2023. We will start on with the revised budget 2023. What are the major impact for individuals? Okay. So it is proposed in that the revised budget 2023 that the resident individual income tax rate be reduced by 2 percentage points for each taxable income ranging between 35,001 to 100,000. So to make the individual tax structure more progressive, so it is proposed that the income tax rate for resident individuals in the taxable income range be revised as follows. So you can see just now, that is the where that the government has proposed that the new income tax rate for the chargeable income 101 up to 250,000 increased by 1%, 250,001 to 400,000 increased by 0.5%, and the new income tax rate is 25%. For those earn income more than 400,000 up to 600,000 chargeable income, the percentage points increase by 1% with the new income tax rate 26%. And for those earn income 600,001 to 1 million, the percentage points increase by 2%, which with the new income tax rate of 28%. Right? So this is the major impact for those individuals earn higher income ranging for chargeable income from 100,001 up to 1 million. Okay. So what are those, what would be the impact for the individuals if they are categorized under that particular, if their chargeable income will be taxed at that ranging, right? So for the employers especially, what you need to do effective from 1/8 2023, so you need to update your payroll system with the latest income tax rate. I believe that all the payroll vendor software, your payroll software is approved by the IRBM or Lembaga Hasil Dalam Negeri. So I think whatever tax updates announced by the LHDM, it should be also updated in your payroll software by the payroll vendors. Okay, so for and by having this income tax rate revision, it would give more tax saving to B40 taxpayers, but it would increase tax payment to those taxpayers categorized under M40 and T20, right? But and also for the non-resident is a non-Malaysian, and if let's say they stay in Malaysia less than 182 days, they are regarded as a non-resident because in the Malaysian Income Tax Act, there are certain conditions that a taxpayer must fulfill to become a tax resident. And if let's say for Malaysians, no problem, you are all resident. But for non-Malaysians, if let's say they work in Malaysia and they are not fulfill the conditions to become a tax resident, so they will be regarded as a non-resident. As a non-resident, their total income, not chargeable income. Remember, I said chargeable income is total income minus all personal deductions. But for non-resident, their total income will be taxed at a flat rate of 30%. Okay, so this one will be also give a huge impact to the individual taxpayer who is a tax resident and non-resident in the calendar year 2023. Okay, all right, now we move on. This one specifically for the employers, especially for those involved in HR, what you need to do following from the 2023 budget revise. So for those who don't know what is the TP1, okay, there is a changes in the form TP1 and TP3 for 2023. This one, all employers, you must take note, all right, subsequent to the budget announcement, you have to update this on your because they have an updates on the personal reliefs. Okay, so you have to make sure that you use the updated form TP1 and TP3. Okay, what is the form TP1? Form TP1 is issued by the IRBM or LHDM. It's an income tax form that is given to the employer by the employee to ensure that their monthly tax deduction or PCD have taken into account the necessary rebates and deduction. And these rebates and deductions are for book purchases, insurance, medical expenses, and others. I think this Form TP1 is not new for many of the HR. Form TP1 is the one that you must send to your employees at least twice a year. This is to allow your employees to fill in all their income tax deduction during the year to enable the employer or HR to calculate their monthly tax deduction correctly after take into consideration all the deductions that they claim via in the form TP1. Yeah, this is not a new thing, but following from the revised budget 2023, but what the employer should be aware of, they must use the updated TP1 to take into account all the changes in the income tax relief. All right, now the next one, Form TP3. Form TP3 also is a form that issued by the LHDN for the employers, and this form TP is applied to the new employee. Okay, for example, that you have a new joiner, and what you have to give to your new joiner this form TP3, and this new joiner or new hire, they must fill up this form TP3, which contains information regarding their regarding their employment with the old employer. Yeah, so what they have to fill up is they must fill up what are their PCB deductions that they have made during the calendar year with the old employer, and they also have to fill up what are those information like their income and all these things, because they want to make sure that the HR will take into account the monthly tax deduction that already been deducted by their old employer, and just want to make sure in the current month where they join the new company, the HR will calculate the monthly tax deduction correctly. And this is also, I think, many of the HR knows what is the form TP3, and it must be given to the new employee, yeah, when they first join your company. All right, okay. Let us move on to the procedures for the Form TP1 requirements, which I mentioned just now. It must be sent to your staff at least twice a year. What the HR can do, they should circulate the memo via email to all employees to fill in the Form TP1. And I would suggest that you can send it via June of the year. Let's say for this year, you can send via 1st June 2023. You send email to your employees, ask them to fill in this Form TP1, and then make sure that, because this one is if let's say your employee probably in the month of March, in the month of February, they have bought a laptop, or they have bought uh, 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 what call this iPhone or whatever, or they have purchased some books, and they wanted to claim this as their relief, books relief, yeah, lifestyle relief, so they can fill in the form TP1. So that's why you should, as an employer, you should send in June, or also in November. You can do it twice a year. And timing to request, as I mentioned, at least twice a year. Example, May or November, or June or December. So it will reflect, so it will easy for you as HR to calculate the correct MTD during that particular month. Yeah, after taking into consideration all the income tax relief deduction that claimed by your staff by in the form TP1. So this form TP1 actually the employee has to approve and sign the TP1. Actually, it should be uh approval of TP1 from employer. So the employer will acknowledge that you have signed the TP1, you have agreed to for the employer to take into account all the tax deduction, and from there the employer will calculate the monthly tax deduction based on the form TP1 that filled in by the employee who's wanted to claim all the relief. And it must be very it also all the employees must make sure that they also keep their records, yeah, to keep all the circulation memo, email, and signed TP1 together with the payroll documents for at least 7 years. Okay, so this is TP1. Similarly, TP3 also, you must also request the signed TP3 from the new employee, all right? And then when you should pass the or send the TP3 to the new employee upon completion of the HR form, yeah. So the new employee needs to provide the form TP3 as well. And I would suggest it should be filled up by this new employee by 15 of the month cut-off payroll cycle. Okay, and you must obtain the signed TP3 form from the your new employee, and then you must also keep all the records, yeah, because sometimes the IRBM will carry out audit and they will ask you whether you as an employer ask your new employee to fill up the TP3 requirement, because failure to do so, it will then may cause the employer, yeah, be penalized for not comply with the TP3 requirements and also TP1 requirements. Okay, it looks simple, but actually it's very important. Every time when there is a budget changes for SNHR as an employer, you must you must be aware of what are those changes in your payroll software, payroll system. Because when you calculate their monthly tax deduction, you must also take into consideration what are the reliefs. If let's say that the relief for childcare center just now extended until 1A 2024. So 1A 2023, you still can deduct the child relief, childcare center relief of the 3,000 just now. For example, just now, the voluntary contributions can contribute to the EPF and claim the relief up to 4,000 or 3,000, including civil servants. So this one, you must make sure that all this actually covered in the payroll systems. All right. Okay. Having listened to all these what we call these changes that affecting the employers from the perspective of LHDN, EPF, and SOCSO, as an employer, I have a few tips for you to take into account, yeah, when you run your payroll or when you manage your staff, yeah, following from the budget announcement. Okay, this is a very important. As an employer or HR or whoever in charge in the HR division or finance or whoever in charge in the business operation, you must always keep updated on the latest changes made by all these statutory bodies. Yeah, especially related to the individual tax, employment tax, and payroll tax. In the budget every year, as you know, that every year we will have a budget announcement. So usually budget announcement will be made in October of the calendar year. Okay, so once a government has made an announcement, so you must sure that you know what are all those updated, what are those has been revised according to the laws. Yeah, so if you don't make yourself updated on all these tech changes, all these other rules and regulation changes made by the other statutory bodies, so it may affect your payroll or whatever tax calculations, yeah, which may cause you be penalized by all these statutory bodies because not complied with the latest rules. All right. And the next one, of course, you must meet the deadline. Yeah, make sure that you always make sure that you meet the deadline. If let's say that the IRBM says that, okay, you must meet the deadline to submit your income tax return by 30th of April. So as an employee, you must make sure you submit your income tax return by 30th of April. For employer, for employer, you also have to comply with your obligations that you must submit your employer's return For example, employees' return for 2022 income, you must submit by 31st March, but IRBM has extended the deadline until 30th April. Yeah, you know what is a Form E, right? As employees' return, you must submit by at least on or before 30th April extension deadline given by the IRBM. So make sure, of course, SOCSO and EPF, they also have their deadline on the statutory deadline payment. So make sure that you don't miss all these deadline, right? Instead, sometimes they also, like for example, IRBM also says that okay, there is a changes in the IRBM's form. So make sure that you use the new form. Yeah, don't use the old form, because sometimes if you use the old form, for example, Form EA for 2021 instead of Form EA 2023 or 2022. So if they have no specific column or additional columns that you are not aware of. So that's why it's very important for you to make sure also you also have the new forms that you can actually download from their website. Payroll updates. You must get ready with the updated payroll software and ensure that all this software is approved by the IRBM. I don't think so you have problem with this payroll software, because I believe that most of the employers, they are using software, payroll software, which is approved by the IRBM. If you're not using the approved payroll software by the IRBM, you are in trouble. Yeah, because all your information, all your calculation related to the payroll for your employees is not in accordance with the law. So make sure it's approved by the IRBM. Early consultation. Yes, you must obtain early consultation or obtain technical confirmation from the relevant authorities, yeah, on the uncertain tax position, and get ready for audit. If let's say that you uncertain on the income tax treatment, you uncertain on the new incentive provided by the SOCSO or launched by the EPF, please seek clarification from all these statutory bodies. If you have a tax agent, you can consult with your tax agent. If you know that your role is to make sure that to solve your problem, the company's staff problems related to all these deductions and also on, seek consultation with the expert, right? Take the opportunity, maximizing the benefits provided by the relevant authorities to support financial difficulties and retain employees. Okay, so because if you have, of course, for the employer, you want to retain all your good employees and all your talents, good talents. It's not easy nowadays for you to keep or to retain your good performers. So by listening, by having by make yourself updated with the news, with the changes, budget changes, and EPF changes, SOCSO changes, maximize all these benefits, yeah, and then maximize all the benefits provided by the relevant authorities and try to implement to the current remuneration packages for them. If let's say that they you have, let's say that they have an opportunity for you, yeah, to provide this benefit, which they can save more taxes. So why not? So please try to take and analyze what are those opportunity that you can implement in your HR handbook, staff handbook, employment packages, and so on. And lastly, yeah, of course, you must keep all your records at least 7 years as required by the IRBM, yeah, HTN. And also I think for the EPF and SOCSO, they also have their own timeline for you to record, to keep all the records related to your employees and also employer, whatever pertaining to the uh, uh, payroll transactions or related to any statutory documents that you must keep for the purpose of audit. So make sure that is all the key points that employees and employees must adhere to, must comply with. Yeah, if let's say they think this is something that good for you to be part of the your HR management and so on. All right. Okay, I came to the end already. I think I have already it's about we have still more times for Q&A, I believe. Maybe what I do, I straight away go to the 3 posted question for me that actually they already come back with this question one. I have 3 questions here, but we can have more question after this. All right. On the first question, number 1, submission of employees return form E via e-filing. Is it compulsory for a dormant company? All right. Yes. When we're talking about Form E, yeah. Yes. The answer is yes. For a dormant company, you must submit the employees return. All companies, yeah, must file Form E regardless of whether they have employees or not. Yeah. Effective from year of assessment 2014, all dormant companies, yeah, must file their employers return, yeah, and all partnership and also proprietor also must now file their employees return as well. So it doesn't matter whether the dormant company has employees or no companies and not active at all. As long as you have that company, it has not been what we call this is dormant, you must still you must still submit the return, the employee's return, and it must be signed by your director. Yeah. Okay. So the question 2, if I am a salaried employee, can I still make a self-contribution? Any limit payment for the voluntary contribution? Yes, the answer is yes. If you are a salaried employee, you can still make a self-contribution. And any limit payment for the voluntary contribution? Yeah, okay. Currently, we know that the limit is up to 60,000 per year, but following from the budget revised announcement, they said that they were revised up to 100,000 per year. Okay, this is a very good, yeah. Though you are salary employees and you also wish to make a self contribution, actually you can save some tax savings here. For example, if the EPF contributions per year as a salary employees is only 3,000 per year. So if you want to maximize the relief up to 4,000, so you can contribute to the self contributions just up to 1,000, for example, because you can claim to claim the maximum relief of 4,000. So between the salary employees and the self contribution, you can actually enjoy the 4,000 EPF relief. Yeah. So this is one of the way for you to maximize your tax saving as well, right? So now we move on to the question 3. This is a bit interesting. In your opinion, what will be the best way for us to minimize our tax, especially for those chargeable income between 100,001 to 250,000 per annum? All right. Number 1, please maximize your income tax relief. Yeah. As you know that the income tax relief, they have about 24 to 25 reliefs, yeah, that the RIBM has posted in their income tax website. But I understand, not all applicable to you. But if let's say that you know that some of the reliefs is applicable to you, so try to maximize your income tax relief. So what I would suggest so for example that for this calendar year 2023, not for 2022 because it's over already. For this calendar 2023, what I would suggest that if you want to maximize your income tax relief, you should make the expenses before the end of the calendar year 2023. This one we're talking about next year income tax filing, because this year income tax filing too late already because the 2022 is already over. So now we are talking about calendar year 2023. So make all the expenses before the year end of that calendar year. For example, if let's say that you want to buy a tablet this year, so you must make sure that you buy the tablet on or before 31st December 2023. So make the claim under the lifestyle relief, yeah, and submit, and then you can submit it in the following year 2024 on or before 30th April. All right. So this is one way maximize your income tax relief. The second thing, what else that you can do in a way for you to maximize your income tax saving, yeah, following from the revised income tax rate for those income earning 101 to 250,000. So I would suggest that as an employee, if you wish to have more savings in your EPF, why don't you opt to contribute to the EPF by reallocating a portion of your salary up to 9% with the employers, with the company's EPF contribution. All right. Okay. As you know, currently mandatory is 11% under employee, 12% is employer. Right. Now, this is for those who like to wish to have more savings in the EPF, yeah? Okay. Why don't you tell your employer, say that, okay lah, instead of you deduct 12% as on an employer portion, can you consider deduct up to 19%? Because for the employer's perspective, they can allow to deduct up to 90% as the employer's tax allowable deduction from the company's tax point of view. But for you, you only, as an employee, on your portion is 11%, right? For the employee, 12%. Why don't you tell your employer, can you please consider to deduct up to 90%, but 7% you carve out from my pay? Okay. I think this is not many wish to do so because they said that if I do so then it will affect my net cash. But if you like savings, I said just now, so you increase your employee's contribution from 12% to 19%, but the 7%, yeah, the difference, yeah, 19% minus 12%, the 7% difference, you have to carve out from your salary. So once you carve out from your salary, so when you report your total salary, it will be lesser than the original salary. Let's say your salary, let's say you have to 100,000 per year, your salary, yeah, you report to the IRBN for calendar year 2023. But after take into consideration this approach, whereby you carve out 7% of your 100,000 salary for the employer to save in the EPF, maybe you only report probably only 90% and 90,000 instead of 100,000. So if you report 90,000, it's much lesser. You have saved at least 100,000, you keep in the EPF, that 90,000 only you report to the IRPM. So the tax rate will only be charged at the chargeable income at the 90,000 instead of 100,000. So at the same time, you enjoy lower income tax rate and also you enjoy some tax saving with the EPF. This is for those who like to have more savings in their EPF, yeah? Okay, so another way of doing it, I think if you can, for the employee or for the employer also, why don't for the employer, you consider, yeah, if let's say that to explore reducing cash benefits to your staff into offer on the more on the tax exempt benefits in kind. Okay, for example, that okay, instead of you give your staff car allowance, why don't you for the managing director, for example, yeah? So instead of you give your managing director car allowance, why don't you convert it from the car allowance, provide your managing director with the motor car and petrol. Yeah, car allowance, if let's say you give 2,000 car allowance per month, the car allowance will be taxed in full. So 2,000 you cut 12 months, so that amount will be subject to tax in full. Okay, but if let's say that you convert it into provide them with the motor car and petrol. Motor car and petrol, the benefits, the value of taxable benefits is not okay, for example, just now 2,000 for the car allowance 12 months, 240,000. If let's say 2,000 per month, you times 12 months, so the 24,000 will be subject to tax. But if you convert to the motor car and petrol, so the only taxable value benefit, we will follow prescribed rate issued by the IRPM. For example, that the company provides Nissan X-Trail, which costs 130,000. The cost of the new car is 130,000. Example, Nissan X-Trail. And you also provide petrol for the managing director. How much will be the taxable value by enjoying using this motor car provided by the company? The 130,000 Nissan X-Trail, probably if you look at the prescribed income tax rate, probably is only 2,400 per year, as compared 24,000 car allowance that you give to the staff. So 2,400 per year is only for the value taxable benefit for the car plus petrol. The petrol also, the IRBM also fixed probably 600 ringgit. There is a table actually. I think for most of the HR, they may know what I'm talking about. Yeah. So the 2,400, let's say the petrol, the prescribed rate say only 600. So you add the 600. So the employee will only be taxed at 3,000 per year as compared 24,000 per year on the car allowance. So there's a lot of difference. Yeah. So maybe that is where I said that employers may want to consider offer more taxable tax exempt benefits in kind rather than giving them cash allowance or whatever which more are converted into which is will be taxable in full. And what else? Maybe for those who are employees, if you're a salesperson, why don't you ask your employer to consider give you traveling allowance? And then give you parking allowance or meal allowance, because you're a salesperson, you have to go out every time, every month, every day, rather than you give me all these salary increase in salary, but why don't you convert it part of my salary into a tax exempt allowances, such like kind of the traveling allowances, which you can claim up to the 6,000 per year, parking allowances, which you can claim up to the actual amount expended during the year, or meal allowance, which also you can claim up to the actual amount expended during the year. So more or less, actually, when it comes to the income reporting, it will be reduced, from the based on the it will give you much lesser in the gross income reporting, and minus off your personal deduction. If you maximize your personal deduction, then will give you what we call this chargeable income much lower. Then of course you can enjoy lower income tax rates, right? Okay, that is what I can think of. But because for the employment income, not many much tax saving that we can enjoy as compared to if you are a sole proprietor or you run a business. Because for the sole proprietor or for freelancer, actually you can claim all the allowable business deductions, but not for the employees. Employees is more on between you and employer, how you can actually tolerate it or give consideration by take into account what else are the tax exempt benefits or allowances that employer may consider to convert from the cash allowances or salary that you offer to your staff. All right. Okay. Now we are more on 122. I already finished that 3 question. I'm not sure whether we have any other question in the chat box.
Okay. There's. Thank you very much, Shalina.
Okay.
I've got some here questions. But I want a clarification with the SVDP, the special voluntary.
Okay, maybe I go. You still can see my slides, right?
Yeah, the 2.0.
Okay, 2.0.
Okay. It doesn't cover the voluntary disclosure. Doesn't cover AMLA, right?
Yeah, it doesn't cover AMLA here. Because what we understand that from the budget announcement that they only said that for all corporate and individual taxpayer, except for the taxpayer that currently under tax audit or tax investigation. But we also wanted to know more from the IRBM whether it's also cover both direct and indirect taxes.
Mm.
Yeah. So because if let's say that they can come out to say that actually it's also cover not only for the taxpayers but also including for all those indirect taxes, then actually it will be good. So we want to know more, clarify more how it will affect all the
Yeah, that's right.
all the businesses there. Yeah. So because the for SVDP 2.0, as I know what is the main difference is that they will waive 100% penalties.
Okay.
SVDP 1, you still have to pay 10%. 2028 period, 2019 is 15%. But this one 100% penalty will be
Wow.
waived.
Okay lah. I mean, that's a
Mm,
better
yeah.
scheme lah. Okay. There's some questions coming in for,
Mhm.
and so we go through quickly.
Yeah.
Tax relief for medical treatment.
Tax
I-
relief for medical treatment. I
Yeah,
just go quickly for the medical treatment. Is this the one?
yeah. Does it include dyslexia?
All right. When it comes to the whether that medical treatment incurred for that such disease is eligible under the IRBM interpretations or not, I would suggest that we look at on the list of the serious disease listed by the IRBM in the IRBM explanatory notes. And I don't think so that one included under part of the serious disease unless we can justify to the IRBM this is one of the confirmed by the doctor as to be part of the serious disease. Yeah, because if you look at the serious disease interpretation in the explanatory notes IRBM, they're talking about AIDS, like AIDS, Parkinson, heart problem, kidney chronic disease, and also they didn't mention a few of this one, but this one, because this is more on the doctor's interpretation, if let's say this one can justify by the doctor is part of the chronic serious disease, he can claim. Yeah, he can claim up to the 8,000. Yeah, because maybe the list of the IRBM is not exhaustive, they still go back to the justification from the medical practitioner, from the doctors, from the registered doctors and hospital. Yeah.
True lah. True. Yeah. Okay, and then next one is that okay, I think you addressed this before. Do all employees need to submit even though their threshold is below the 34,000 mark? After the
Okay, on the income tax return, is
Yeah.
it? Okay.
TP1.
TP1. Okay, the TP1. Okay. Okay. Technically, no. So because we are talking about those employee chargeable income, not chargeable income, we are talking about chargeable income lah, correct? Chargeable income below the threshold. So technically, no need for the employee even to notify IRPM about his chargeable of income which is below the threshold, and if let's say that because they are below the threshold, they are not subject to tax, so there is no need for them to fill up the form TP1, form TP1, right? But it was encouraged lah by the IRBM to say that okay, still go and get the income tax number, and then if you have no income, then submit income tax return for the benefits of that taxpayer in case that they want to use that as for other personal reasons. I don't know. Maybe they wanted to use to apply loans and so on. Yeah, it depends. But technically, if you ask me, based on the Income Tax Act also, those who subject to tax is only that require to submit the income tax return. Yeah, and the chargeable income below the threshold for the single, if I'm not mistaken, is the annual is 37,333 after minus EPF. For the merit cover, for the married person, if the wife is working, if I'm not mistaken, it's about 48,000 per year. But if let's say the wife is not working, I can't remember, it's about 54,000. Yeah, it's around that.
Okay, great. Okay. Oh yeah, the next one is quite correct. We're talking about liability. You see,
Yes.
about the submission of this the TP forms. Why is it the onus on the employer rather than on the employee? Because the employer wouldn't know exactly if there's any changes in the employees requirement for changes, for
I see. Okay, TP1 and TP3 are the employer's obligations. Your obligations actually is to send the form to your employee to fill in the form and get the signed form from your employee and keep that TP1 and TP3 7 years from the year of for that year of assessment, and use that TP1 TP3 to calculate your the employee's MTD or PCB correctly.
even if there's no change.
Even if there's no change, you still have to send your TP1, TP3, I would say TP1, TP3 is only for those new employees.
New ones,
the new TP1, you still have to give to your employee, even though there is no change, even though they not fill up, it's a blank form, get the employee to sign and return back to you. So when the IRBM carry out audit, so the first question they will ask you, did you send all these TP1 to all your staff? And you said no. If they say no, why? And then you have to justify to IRBM, because this is probably you just say, oh, because there is no changes. That one cannot. IRB may say that that is not the way of that they will consider that you are not comply, because the TP1 is a must, is a form that you must send all your employees. Okay, this one also, the one of the question that you say just now, what if the employee is below the threshold, not chargeable to tax? So that is a valid reason. So for you not to giving that the TP1 is fine. But for those employees who are chargeable to tax, even there is no changes in the information, the employer must give that TP1 to the employees. Whether it's correct or not on the deduction that they wanted to claim is not under the responsibility of the employer. Yeah, so the employer don't have to worry. Even though the employee, they will put all the funny things there. They want to claim the let's say the lifestyle relief 5,000. If let's say that they wanted to claim this sports equipment, and you as an employer, you just follow. So if let's say that the IRBN asks why you are over deducted or are under deducted of the MTD, then you show I follow, I just based on the TP1 actually, which is filled up by my employee and signed by my employee. So I just follow that TP1. And that is where the IRBN may audit the employee, not the employer.
Yeah, that's always the problem. I mean, most employers, I mean, there are certain things are known, like the number of children you have, therefore, whether they're going to university and stuff. We wouldn't know. I mean, if an employer has 20,000 workers or even 1,000 workers, is so difficult. How do you know when you buy the tablet or the new mobile phone?
Yeah, you are right. That's why they not penalize the employer. But as an employer, just send the TP1 to them. Send email at least twice a year. Send it to them so you can prove to IRBM I sent the TP1, but they never. Even there is also employees, some employees, they never bother to return back the TP1. It's fine.
Correct.
It's fine. As long as you can show the IRBM, I send this TP1 via email on this date, but they didn't return back to me. So I just leave it, because by right they should send it to me, but I already fulfill my obligations. I already send it to them. So it's up to them whether they want to fill it or they want to return back. It's fine. From the IRB points of view, they accept it as long as you already comply on that requirements. Yeah.
Actually, it's not IRB in that sense that benefits from that, it's got to do with the employee, because I want to have a
Yeah.
lower PCB being deducted. Therefore, in
Correct.
my interest to let the employer know. The IRB couldn't care less. I mean, as long as you pay your taxes, right?
Correct. And this is one way of you to maximize your tax saving. For example, let's say that you think that for this month, I want to have lower PCB for the month. Yeah, for example. And I remember that I just bought this let's say phone, tablet or whatever that around 2,500. Yeah. So why don't I fill up the TP1 and then get the employer to minus off my 2,500 personal relief and deduct it, and then of course I will get more, cash during that particular month.
All right.
Mm.
Oh, okay. Coming back to just now, the below the threshold,
Okay.
that is TP1. But what about TP3? Do we still need to? I mean, a new employee starting, but below the threshold. So is the
Oh,
TP3 still required?
I would say yes, because we would just want to make sure that either he's a subject to tax or not subject to tax. We still want to check on their previous employment, whether when they work with our company, at the end of the year they are already reached the threshold, more than the amount of threshold. So the TP3 actually is only the form just want to know what are those income or salary background or information that they receive from their old employment. Because if let's say that true, they are not subject to tax, it's fine, but just keep it on the TP3. TP3 is only applied for the new employee. I would suggest you get this TP3 filled up by this new employee. Either they are below or above threshold. But the TP1 is, let's say they are below threshold, is okay, because they are not even they are not even subject to tax, and why they want to report all this deduction and all these things. So that's why for me, you have a choice there. If let's say that the RBM asks, so you just tell them he's a below threshold, then that's why I don't want to give the TP1 to the employee. But having said that, Sean, when we're talking about the employee below the threshold or above the threshold, this is not the same concept applies to the Form E. For the employee's return, the Form E, now the IRBM wanted employer to report all the employees' information in the Form E regardless of their income. Lady or security or whatever, if let's say the salary below the 30,000, you still have to report in the employer's return.
Yeah.
Mm, mm.
How do you handle those like employees that malam they go in Grab driving or food panda?
Okay. This is a part-time, right? Okay. For those who are part-time, as an employer, we don't know, right? We are only know you are my employee, I am employer. I only knows about your salary or whatever remuneration packages that I offer to you.
So it's up to
I
you.
will report.
Yeah, it's up to the
For the
employee.
for the
Taxpayer
individual,
to be honest lah.
for the taxpayer, they must report that as part of their additional income, because this is governed under the Section 4F of the Income Tax Act dan lain-lain income. So if the IRBN found out that you earn extra income by third party, so then they will anytime has a right to raise additional or provisional assessment on that based on their estimation on that. So sometimes that's why you suddenly receive notice of additional assessment. For example, Form JA. And then you say that how come it's not same as the Form EA? Then that is where you started asking IRBM. Then IRBM say, yeah, I got it information from the third party.
Actually, you're right. I just want to little bit of a tip lah. IRB has actually did ask the platform players to actually supply such information, you know. So they will get you eventually. I don't think that you can run away.
Yeah,
Okay.
even though they have a exchange of information with the other tax countries
Alright.
authorities. So for those who earn income, foreign source income is okay. But just another okay. If you look at the new income tax return form EBE, Sean, there are a few columns asking you to report about your foreign source income. If this foreign source income is not applicable to all the taxpayers here at all, just then put not applicable, leave it, yeah, 0. But if this foreign source income applicable to you, so that's why where you have to fill up. For individuals, yeah, all foreign source income is not subject to tax for the 5 years, from the year 2022 until the 2026, I think. 5 years, 6 years, all right? Provided that that foreign source income has already been imposed tax by that foreign tax countries. So if let's say there is no tax imposed on your foreign source income, the IRBM may want to tax you. This is still gray area lah, but this is one of the conditions.
Okay. Well, we have just slightly run over time. There's last one. I think also again, I think you have already addressed that it's got to do with the TP1. Like you
TP1
say,
again.
it's safer for the employer to email out just to demonstrate that you have actually distributed the TP1 to the employees, even if the employee did not sign or return, submit back, right?
Yes,
So
you're right.
for your own report, if IRB comes and you say, yes, I've already done, and they didn't submit back. So it is good record keeping lah.
It's a good record keeping. You're right. Form TP1. Yeah. Because I know not many employers started applying this form TP1, TP3, but I think now many during my webinars last time, I saw that many employers have started, complying with this form TP1, TP3. 2 years back, 3 years back, no, they thought that this is not compulsory. But
the problem is this, that you got to keep thousands of copies for 7 years. Maybe, I don't know, can it be digital format, like filling up?
Talking about the digital format, if you have read, I have read somewhere one of the news to say that starting next year, our Director General of Inland Revenue wanted to have a platform of digitalized information. All the receipts now, taxpayer can actually, save all their receipts in the digital platform, which IRBM will launch. If I'm not mistaken, next year, I think. They are setting up.
Good.
This I think last month, I think, if I'm not mistaken, the Director General in the Revenue Board, they actually concerned about all these taxpayer. Why don't, because they don't want to keep all these receipts. Yeah. Even you ask me the receipt for the 5 years back also, I don't know. Hilang. So that's why they already come out. They are trying to, now I think they are setting up. They are trying to get this thing done, settled by next year. So now, if let's say that you buy books, for example, maybe you buy books, then after that you scan the receipt and then you download into the IRBN portal digital receipts store, for example, storage. And then from there, IRBM will automatically have the information when you fill up the form EBE. That is something that I think that they are going to do that. So you just, the minute you got the receipt, you just screenshot and then you download in their whatever apps or whatever platform, digital platform website. Then after that, you finish already. Then after that, you don't have to worry about your receipts. That is something they are going to do, very soon. Yeah, hopefully that they will launch this as soon as possible, which I also looking forward for the 2024. Yeah, it will save a lot of times. Yeah, especially if let's say, because sometimes IRBM also, it is only a small matter of not giving you a receipt for to purchase the books. It can end up back your personal relief and end up you have to pay at least, I don't know, sometimes 800 ringgit as the additional taxes. We don't know. Yeah, this is also happened.
Yeah, true. Okay, right. So now we have done almost everything. No more question. I think we're gonna stop here.
Yeah, sure. I'm so sorry. I don't know what happened to my video. It's stuck somewhere.
No problem, no problem, no problem. Okay, so I think thank you very much for everyone who have signed in. Sorry we couldn't answer every more questions. We're running
Is that a
out.
lot of questions, Sean?
No,
If
just
not,
one more. I think
I think it's
it's
okay.
already addressed also before. When is this TP1 compulsory? When did it start?
Oh, TP1, I think is before 2020. I think it's around.
It's already in place.
It's already in place since 2019.
Yeah.
Since 2019, and it's a become I think and last I think it started compulsory. I think last 3 years back, and that is why they're so worried about TP1, TP1 and TP3. Yeah, so I think from now onwards, please make this as a practice for your company to send the TP1 twice a year to your staff. Yeah.
Okay. Great stuff.
Mhm,
Okay,
mhm.
without going further, we need to close this. Thank you
Yeah.
very much, Shalena.
Okay, you're
And
welcome.
everyone who's watching, just stay tuned. We have a few more things that's very riveting conversations that's going to come out. Just keep a watch out on your
MICCI.
our social media and your emails. That if in a month or two there's another expert hour coming on board, so just tune in and learn a bit more about what's happening. Okay, all right. So see you guys next time round.
Okay, bye-bye.
Bye.